Again.
Shares of Life Insurance Corporation hit fresh lifetime lows on Tuesday following another bout of selling. At 751 rupees per share, the stock of India's insurance behemoth is now down 21% from its issue price of 949 rupees per share. This essentially means investors who bid for the stock during its IPO have lost wealth worth 1.24 trillion rupees. With this, the company's market capitalization has also slipped below the crucial 5 trillion rupees mark as it settled at 4.76 trillion rupees on the BSE yesterday. LIC now stands at 7th position among the top 10 companies on the BSE based on MCAP ranking. It is only ahead of SBI, HDFC and Bharti Airtel. According to analysts, a number of concerns are plaguing the stock. MK Global, for instance, pointed out in a recent report that LIC's embedded value will likely go down to 1x from IPO valuation of 1.1x. That's because LIC adds merely 1 to 1.5% of EV from value of new business segment as against 8 to 11% in the case of private life insurers. Moreover, LIC's September 2021 EV consisted of almost 70% of equity mark-to-market gains. Therefore, the sensitivity of EV to equity market corrections is far higher than private sector peers. Secondly, MK claims that LIC's dominant share in the single premium group fund management business artificially inflates its market share and deflates some of its cost ratios. Despite its massive scale, the brokerage feels LIC's commission and OPEX ratios are on the higher side relative to cost-efficient larger private players, if seen on the basis of adjusted premium basis. Adjusted for the group's single premium business and LIC's almost ULIP-less product mix, its persistence and surrender ratio are not impressive either. Another concern that global brokerage Macquarie pointed out was doubts over scale-up of bancassurance business. According to the brokerage, while LIC's highly productive 1.3 million agents remained a formidable force, the scale-up of bancassurance business remains doubtful considering the three largest banks, HDFC Bank, ICICI Bank and SBI, are not a partner for bancassurance. Besides, LIC's presence in other channels like direct or online has been insignificant. Therefore, the question that's haunting LIC shareholders is whether there's more pain in the offing for the stock, especially when its anchor investors' lock-in period is set to expire in about a fortnight.
I think it's got to do more with the market sentiment, and quite a few new investors in this. And it's quite natural. Generally, if you look at any issue, any public issue, IPO, which opened in the negative and remains there for a while. And now it's been a while now for this LIC, about a month. Yeah. So if it remains like that, then typically you see a further correction. And at the same time, if the earnings had something surprising on the positive, that could have possibly helped the stock. Even that did not help. People typically have some parameters where if the stock remains down for a while, they possibly exit.
Technically too, the stock has an immediate trend line resistance at 831 rupees. This is lower than MK Global's target price of 875 rupees per share and Macquarie's target price of 1000 rupees per share. The near-term trend for LIC therefore remains somber, with nervousness in the market further dismantling any likely rally in the stock. On Wednesday, all eyes will be on the Reserve Bank of India's monetary policy outcome. The markets are penciling in a repo rate hike of up to 50 basis points, but they will eye the central bank's fresh outlook on inflation and GDP growth